please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We told you that the 18th EY World Entrepreneur of the Year Award is currently underway in Monte Carlo. As part of the award, a survey has been commissioned by EY, Euromoney Institutional Investors Thought Leadership, to undertake an online survey of 2,766 C-suite executives, of which 60% are CEOs, founders or managing directors in companies from 21 countries. The period of the survey was between the 15th of January to the 1st of March 2018. To discuss the findings, we're now joined by Annette Kimmet, Global Growth Market Leader at EY. Annette, appreciate you joining us. So what does the survey tell you in terms of the outlook for growth? What are CEOs thinking of?
Hi Shireen, thanks for having me on. The survey basically told us that optimism is growing. 80% of the C-suite told us that they expect their businesses to grow over the coming year by somewhere between 6 to 15%, which is significantly above GDP forecasts of 3.9% and certainly much higher than the sentiment same time last year. Now, the other thing that was really interesting about that was the main impetus for that optimism came out of the Asia-Pacific region.
Okay, so Asia-Pacific, the most confident about global growth. But Annette, you know, if I were to look at the findings of the survey, you pointed out that companies are targeting growth rates of between 6% and 15%. I understand that 23% of the respondents who look at double-digit growth numbers continue to operate in the tech sector, and 15% are in fact based in the US. What about India? 1 in 10 of the respondents is based in India for companies that are targeting a double-digit 15% kind of growth number?
Yes, that's right. So again, huge optimism in India about the opportunities for growth. And I think what this is telling us is that the much talked about pivot from west to east is no longer a fiction, it's a reality. And if you look at what some of the things that have been happening in the Asia-Pacific region over the past 12 months, the signing of the Trans-Pacific Partnership Agreement without the US, the One Belt, One Road initiative coming out of China, and the impacts that that's having right across the Asia-Pacific region, this is really fueling optimism across all countries, India included.
Okay, so TPP and the One Belt initiative, you believe, are the factors for why the Asia-Pacific region seems to be more confident. But Annette, let me also ask you in terms of the jobs market, because while countries like the US are seeing very strong jobs growth, in fact, the best that we've seen in 40 years, what is the survey telling you in terms of the trends for global hiring?
Well, it told us that hiring sentiment has actually gone up quite significantly. 39% of all of our respondents are telling us they intend to increase their full-time workforce over the next 12 months. That compares with 27% last year. The other interesting finding was that this year only 1% of the respondents are telling us they're going to reduce their headcount. That compares with 10% last year. So much stronger hiring intentions.
Well, that is a significant drop. Yeah, that's a significant drop. You're saying that only 1% of the respondents are now looking at cutting down their workforce as opposed to 10% the previous year. Annette, you know, I was just chatting with Mark and he was fairly confident that M&A action is likely to continue in 2018. What's the survey telling you? Because, you know, what is the dominant growth strategy for most companies who are looking at double-digit kind of growth rates? Are they looking at entering newer markets? Is that a strategy for companies based in the US, China and India as well?
Absolutely. Entering new markets is a really critical part of the growth story that we're seeing this past year. The opportunities from entering into new markets, again, particularly in the Asia-Pacific region, is part of what's fueling this great optimism, and it's certainly featuring in the growth strategies of the respondents that replied to our survey.
You know, while everything looks good on growth for now, Annette, what is the survey telling you in terms of the key risks? I would imagine that CEOs are worried about the trade friction that we're currently seeing. What does the survey highlight in terms of specific risks and specific challenges? Working capital, access to finance, is that a consideration as well on the risk side?
Yeah, look, the two biggest risks that came out and that accounted for more than 50% of the total risks. The first was cash flow challenges. So that's about working capital, and the other was technology disruption. But there's actually a connection between these two things. If you think about the impact that new technologies have had on disrupting business models, on creating new business models, on changing customer buying behaviours, these things are really disrupting the predictability of the traditional cash flow cycles. So it's that predictability of cash flows that's really challenging, and CEOs are calling out as a significant risk to the business. What's interesting, though, is that it's actually going to be the technology that's part of the solution to this, because it means that to be able to predict cash flows in this new world, unlocking insights from your customer data is going to be pretty important.
Speaking of data and speaking of risks, Annette, what about the regulatory risk and the regulatory challenges? For instance, in the EU, we've just seen significant data privacy regulations being passed. How much of a consideration is that? What are the other key regulatory challenges that CEOs are concerned about?
Well, on the data privacy and data breaches issue, this is an area that I think the results are somewhat troubling. Only 6% of our respondents called out cyber threats as a key risk for their business over the coming year. And that flies in the face of what we're seeing happening around the world right now. Only 7% of our respondents intend to invest over the next 12 months in technologies to combat the threat of cyber risk. So I do think that that's going to be a real challenge for businesses over the next 12 months. And to ignore cyber threat, they do it at their peril.
Well, you're absolutely right. I'm surprised as well with that finding that only 6% are calling out cyber threat as a key risk. But Annette, 2017 was a big year for the IPO market, was a big year for private equity players as well. What about 2018? What does the survey tell you in terms of the IPO pipeline globally?
Well, I think it's still quite strong. I think the optimism is fueling a strong pipeline. I know we track the IPO pipelines around the world every month, and our pipelines are looking pretty strong at the moment. So I'm not seeing any dampening of sentiment on that front.
Okay, I'll end then by asking you an India-specific question, Annette. What are people most excited about in India, and what are they most concerned about as well?
I think people are actually most excited about the opportunities related to innovation. We're seeing about a third of companies telling us that they really are focused on unlocking innovation, the innovation coming from their own workforces, from their own people, and also excited about the opportunity to partner with customers to unlock innovation. Perhaps one of the most interesting and exciting findings for India, and in fact this played out right around the world, was intentions around adopting technologies like artificial intelligence. So even though hiring intentions are strengthening, we've had a massive upswing. We've seen a massive upswing in every country in the intentions to adopt artificial intelligence into businesses over the next 2 years. Last year, 74% of respondents around the world told us they had no intention of introducing AI into their business. This year, 73% have told us they've either already started to or they plan to implement or adopt artificial intelligence over the next 2 years, and that's at the same time as we're seeing hiring intentions strengthen. So that's telling us the robots aren't really going to replace the humans.
Well, it doesn't look like that just yet. If one goes by what your survey is telling us, that really is a dramatic turnaround, isn't it? Last year, 73% saying that they weren't looking at AI, and this year's survey saying that 74% have already used AI or planning to invest in AI technology within their organizations. Annette, many thanks for joining us here from Monte Carlo to take us through the findings of the EY Growth Barometer. Business confidence is up, global growth looks good. Some risks that CEOs are weighing in at this point in time, but for now the story is on track. Thanks very much for joining us on this CNBC TV18 special. We appreciate your time. For now, it's time for us to say goodbye. Stay tuned, there's a lot more coming up.